Good morning, everyone, and you're all very welcome to Friday's market cap. It's Jared here from the Alpha Capital Group. So I suppose the big talking point this week, first 2 or 3 days of the week, price action, very condensed, very consolidated. Yesterday we had the ECB, very, very hawkish, and I suppose overall hawkish for the markets outlook by ECB President Lagarde. And the markets have completely springboarded out of the ranges. Now, as we look at the week ahead, obviously it's going to be a very, very difficult close this evening because we do have the US CPI figures. Now, overnight we did have the Chinese CPIs, but largely speaking, actually the CPI figure for year on year actually come in under expectation, which shows that there's no real inflation issue. Chinese inflation at the 2% mark at the minute and holding there. So nothing massively bearish regarding that. But yesterday's movement, ECB, although they kept their interest rate normal, they have signaled the intention to start increasing rates in July. And the rhetoric that was kind of given yesterday indicates that they're now looking for the beginning of a rate hike cycle. And if anyone who doesn't know, a rate hike cycle means that there's going to be regular increases in the interest rates over a sustained period of time. Now, again, that's going to bring back the idea that it'll give a little bit more strength probably to the euro over the long run. We've seen obviously the euro fly back from 122, 125 all the way back to kind of 107, actually 104 back into kind of 107, 108 now. So it'd be interesting to keep an eye on that over the next kind of 6 months to see how does the euro perform. But also speaking yesterday, the indices, the stock markets did not like the rhetoric from Lagarde, and they did sell off, broadly speaking. You only have to look at, I've even got the UK here, I've got the DAX, and I've got the 3 US-based indices. But if we look at our European indices yesterday, price action completely bolted lower. Sold off actually into it, funnily enough, and then yesterday from 12:30, straight line selling. So it broke out of this condensed, consolidated region. Price action took the lows, and we continue to sell off with rapid enthusiasm. So we've actually sold off approximately from where we were at 12:30, the 12:30 highs, we actually sold off approximately 500 points, 450 to 500 points. So that's a massive sell-off in pretty much less than 24 hours. So for those who don't know, that's about a 3% sell-off, 3.5% sell-off. So again, showing that the volatility is ever present in these markets. You do have to be conscious of that. You do have to keep an eye on these fundamental events. I know some people trade fundamentals, some people trade technicals, some people trade smart money. But I think for important elements like this, you do also have to factor in the fundamentals of what's going on in the wider market. So German DAX has led the way. We've seen it across as well in the FTSE. FTSE has broken out of its slumber, it's taken out the lows, and price action has continued descending lower into the CPI print today. Now, again, we're seeing this widespread sell-off across the board. We're seeing it in the UK, we're seeing it in the DAX in Germany, we're seeing it in the Dow Jones. You only have to look at the Dow Jones yesterday. Price action completely bolted lower. This was initially a 12:30, then this was the open. Price action got hammered lower yesterday, 2:30 p.m. open. And price action since then continued to sell off right into the close. We had a little bit of consolidation this morning. We've broken the structured lows, the short-term lows this morning. We've come back into flag into this region. We've rejected it again. So, of course, now we're watching to see, does these near-term lows here at 32,200 being taken out? If this area is taken out, we're going to see further selling, okay? Same again on the DAX, or same again on the S&Ps, right? If we go back to the S&Ps yesterday, sell off into the open. As we see here, we've a little bit of a kind of a consolidation. Price action breaks the structure, breaks the range, sell off, fundamental catalyst, price action breaks there. Again, through the evening, right into the close, we get selling, consolidation overnight. We've broken structure again this morning, flag back in. So again, worth keeping an eye to see, does these structured lows break? So you're talking there, 32,200 is a psychological level. 4,000, approximate region 4,000 is your level there on the S&Ps. And if we go across to the Nasdaq, very, very quickly, again, seeing that breakout, price action breaking structure out of the range, taking this medium-term consolidation that we've seen now for kind of a number of weeks. We've broken out yesterday. So initial sell-off, price action declines further into the US Open right through the course of the US session into this consolidation. Now, as we speak, Nasdaq It did technically kind of break the lows if you're going by candle structures, but the price action has flagged back into these kind of short-term highs here around 12,300, 12,350. So again, actually under 12,350 by 12,340. So again, watching to see, does the price action break structure? If the price action breaks this down, we could potentially see selling. Now, at the same time, we do have the CPI figures, as I've alluded to today. Now, again, Yellen this week has made 3 or 4 comments about how bad this inflation figure has been. And that's probably been another reason why the markets have sold off so much into the CPI as well, considering where we were. Let's say, if you go back to the price action on, where are we talking? I think it's about the 6 or 7. So this is Tuesday's price action. So from the midweek highs, Tuesday, the price action is down 150 points in the S&P. So that's, again, approximately 3.5%, almost 4% of a sell-off in 4 days. So again, that's alluding to the fact that Yellen's comments this week has also kind of helped to kind of bring a little bit more bearishness into the price action into markets. So from a broader consensus, all eyes really on the inflation print today as we speak at 130 to, I suppose, give us some more directional bias. It could be a sell rumor by the facts now where this has all been priced in, and we could see the indices rally. Very, very easily, depending on the figures that come out today, given how much we've sold off already into the week. So we do have to be kind of on the boil, watching the price action as 130 develops, as the afternoon unfolds, to see, is there a case where the price action sells off, leaves this level and declines further, or is this a kind of a sell rumor by the facts now who are actually buying back into maybe a bullish close? So we also have to factor that into a hypothesis as well. So it's just all about watching the fundamentals, seeing and I suppose understanding what the wider circumstances are at play, and then obviously bringing that back into your own visible charts. Okay. Also as well, the yields is continuing to tick higher as we see with the dollar index. So if I bring up the dollar index as well, very, very quickly, we can see how the price action has performed very, very prominently in the last year or so. So the yields has continued to kind of tick up back into this 3.05% level. Gold has actually come off marginally as well. So you can see how the DAX has come back right into this region. So this negative flag, breaking structure, price actions come back down. Now we're flagging higher again. So this is, again, all going off the back that, right, we're still probably seeing a little bit more of a bullish dollar coming into play. But now this area of interest between kind of 103.50 and, as I said, kind of 103.80 is going to be the kind of the big talking point this week to see how does the price action fare out in this zone. Could potentially even extend higher, take out these short-term highs with a little bit more dollar strength today and come back into this 104 handle. Let's wait and see. Meanwhile, on gold has been a little bit more corrective yesterday, and we came back into that 1850, 1860 levels. Price action has sold down again, and we are back underneath 1850 again. But broadly speaking, market's still very, very choppy. Gold, not really interested in it at the minute because it's just kind of moving sideways on the broader perspective. So I'm leaving that be, personally speaking. So that's pretty much it for our run through. So all eyes really on the CPI figures, again, off the back of the figures we had this morning, overnight, and of course the ECB yesterday. So again, keeping a close eye on the CPI figures today at 130. So, and again, just as a side note, anything above expectation is generally going to mean bad for indices. So if this is 8.5, let's say, so anything a higher figure on the CPI means a bit more bearishness for the markets as well. So just factor that into consideration as well. So last piece of business is our competition for June is now underway. So if you want to be with an opportunity to get a free 100K evaluation, please do feel free to enter the competition. So first prize is 100K, I think second prize and third prize is 50 and 20K respectively. Thank you. Have a great weekend, everyone.